Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Welcome back to another fantastic episode of Fintech Daydreaming, and as is tradition these days, every other episode is with our fantastic friends at Helsinki Fintech Farm, where we share with you what's new, what's hot, what's interesting, and what is maybe not so interesting in the world of Nordic Fintech. So of course, without any delay, this is another episode of Nordic Fintech Highlights, which sort of partners with your newsletter that you bring out every month.
Yes.
Taking a look at what's been happening, what's been hot, what's been going on, and I'm, general high level, what's been the trends for January, the first month of 2024?
Yeah, so we have wrapped up now the first month of 2024. Nothing too dramatic. We can see things going on a lot. Actually, surprisingly many things going on in Denmark, and nothing going on in Norway. I don't know if they have like an extended Christmas holiday or what's the drill there. But a lot of things going on, especially in Denmark. We can see a lot of new partnerships being established, and great thing is that there's a lot of partnerships with Nordic fintech companies established outside of the Europe. So there's clearly traction not only within the Nordics or within the Europe, but also North America and so on. Also, if we look at the funding charts, the number of rounds is pretty stable and normal, but the total amount in euros or crowns is fairly small. So we can see smaller rounds for early stage companies, but we're still lacking the big 100 million euro rounds, which we were witnessing a bit more a couple of years ago. But I think we'll get back there as well. And then if we look at the banking side, things going on. Danske Bank, 2 new partnerships in January. We'll talk about them a little bit. And then SEB, which in my opinion has been probably the most active bank in the field of fintech strategic partnerships and investments. They did an investment in Kivra and started also a partnership. What do you think? What is the number one Nordic bank in terms of fintech collaboration?
Oh, I'm not able to say for good reasons. We'll come back to that later. But yeah, just reflecting on the January piece of news. So is it just me? Was the list actually shorter this month? Because it feels like we have like almost like 100 articles usually in the newsletter. Now the January one was fairly condensed. I mean, really interesting, good news that we're going to talk about. But is it like this always in January?
Yeah, it's a bit December, January usually bit more quiet. So it goes in cycles. So you shouldn't maybe stare on a monthly basis. The big trend is quite constant.
But yeah. if we sort of reflect on the economical landscape at the moment, right, that we're in, could it be potentially also that funding is being a little bit more cautious, new activities are being a little bit more cautious, looking into what's going to happen this year, what is the there's an awful lot of turmoil, right? Geopolitical, financial, an awful lot going on. Could that be putting a dampener onto people wanting to start fintechs, doing partnerships, doing lots of big investments? Or is this a normal January trend?
Yeah, of course, the times aren't the best. We're also in a kind of a cross-section because the venture capital market is being cooling down for a while already. But at the same time, the traditional financial institutions are making better results than in ages or even ever. We have now just witnessed a few Q4 results from last year, and the numbers are good, which also means that the banks have more money to spend on tech investment, partner with fintechs. So it's a bit like a mixture of lack of venture capital money, but at the same time the traditional financial institutions are capable of now investing a bit more to the tech side.
My translation a little bit with talking to the banks though is yes, they are seeing an increase in cash flow, right? That they are seeing interest rates going up, which is making them more happy on the bank balance. But at the same time, they know a lot of that is coming from interest on loans. More people are going to potentially default on loans. Less people are going to take loans. So I think a lot of banks are saying, we're getting this money, but we're going to hold on to it for now because we don't quite know. Again, uncertainty. But as a recovering banker, what's your view on that?
I mean, good observations. I think overall, if you kind of look at what is the reflection towards the funding of fintech startups, I think we're seeing that the capital is still moving, as we can see from the news, but it's more going into the already established ones. So we will see less of these risky, let's put in like 5 million into a small fintech startup type of thing. So those kind of call them a kind of widespread gambles from a VC perspective are happening less in these circumstances. So when you have fintechs that already have an established customer base and they have a fairly, let's say, large balance sheet, whether they're profitable or not, these are the ones that are being seen as more attractive investment opportunities. That's my kind of gut feeling here as well. And the reflection to the banking side of that is, of course, that they are also able to de-risk a lot now with this kind of interest rate environment that they have right now. It somehow feels that the banks are always preparing for the nightmare scenarios. It doesn't matter where we are in the economical trends. They're always saying that, we're just preparing for the worst. So again, we are in the same situation.
Risk averse.
Yes,
risk
exactly.
averse. I mean, it's part of the fundamental model of banking, right? To be risk averse to a certain degree. But talking about funding, talking about fintechs and startups and everything else, I mean, there's been this roller coaster ride around cryptocurrencies, and that's gone up and it's gone down, and both you and I stuck our heads out on an earlier episode, made a prediction, but then came back and slapped us in the face about 24 hours later. I mean, what do you think about the events that unfolded in the US? I'm shocked. I actually am shocked. To me, it's a heading in the wrong direction. But
yeah, it is, and there's a lot of debate around this, as always. And if you actually listen to what we were predicting, we were saying that they will probably go through with it, but we kind of hope that the fundamentals are still in place, that they will actually not approve the ETFs, the Bitcoin ETFs. They of course then went around and did do that on the grounds of there is no legal basis to block them anymore. But when you look at the statements from the regulators, they're saying that these are still high risk items. This is basically gambling. All of the fundamentals that we have been worrying about are still there. So nothing has changed in that perspective. They just ran out of the arguments from a legal standpoint to actually avoid or prevent people from gambling their money effectively. So
but the biggest problem here, as I see it from my side, is yes, you're putting trusted financial institutions in the middle of this. You're taking an awful lot of potentially, being careful here, but financially illiterate people with some money, take that being their pensions or whatever else, thinking, hey, here's a great opportunity. And they have a lot of trust in these financial institutions, these wealth managers, etc. It's almost like gambling in the casino that's gone outside of the walls of the casino, right?
Yeah.
And I'm worried that we're going to see people potentially ending up in a worse situation with their life savings or their last amounts of investments for their pension fund or whatever else the case may be.
Yeah.
Because the wealth managers do want to make an extra buck.
Yeah, and again, you might be part of a pension fund. You don't even know that you're being exposed to crypto. I mean, most people don't know what's in their pension portfolios. I mean, they don't care. They should not care. They should trust the institutions that they have chosen to do that. But we had this debate or thread on LinkedIn actually, where we were discussing that the crypto space has this saying that turn your friends into exit liquidity, and I think this is about turning unaware investors into exit liquidity. So what we're seeing now, if you look at the price of Bitcoin, everybody predicted that's going to go to the moon, but actually it went down. So what happened is that all those billions that went in, there's debate about how much it actually was from the ETFs in the beginning at least, but all of that was drained out almost immediately. So again, a lot of people were waiting on the fences, waiting for this liquidity to come in to cash out immediately, which they did. So I think it's quite cynical of the Bitcoin industry to say that this is like a watershed moment. It's a watershed moment because they were able to convert their gambling into fiat now. But yeah, just me.
No, let's steer away from this. We have made it perfectly clear, I think, that as far as the FinTech Daydreaming podcast is concerned, we are not sitting on the fence of hip hooray Bitcoin, right?
Yeah,
So,
no.
But Janne, I just want to pivot a little bit. We talked about January, but Helsinki FinTech Farm has got a fantastic event coming up soon, right?
Yeah.
Here's your chance. Promote it, my man.
Yeah, so Nordic Fintech Summit coming again. That's our main event, and it's on May 16th. We have this year very clear and strong focus. We have 2 tracks, 2 stages, digital banking and digital payments. So that's the two areas we're focusing on. We have around 50-60 international speakers all around the world coming, around 700 people, mostly Nordics, Baltics, but anywhere in Europe or outside Europe, you're warmly welcome. So please join us for the great day. We'll have side events also before, after, some networking, karaoke, maybe roundtables and so on. But it's been always fun to have you guys there. Let's see what we can do together around the event this year. And yeah.
Well, we're still the official podcast partner of Helsinki FinTech Farm, so
Yeah.
we'll be there one way or another. We will be there covering the event. So
Yeah, and I will not miss the karaoke. So again, I have to be there this year.
absolutely, yeah. And it was interesting. I looked through the list of speakers, and it's a who of guests on the FinTech Daydreaming podcast.
Yeah, there we go.
So an opportunity to catch up with old friends and make some new acquaintances. So I'm really looking forward to it, and I hope that most of our listeners who can will attend and join as well.
Yeah. So if you haven't registered yet, so you can get a discount with the code Daydreaming, and link in the description, right?
Yeah. We will put the link in the description, and daydreaming. That's like that. But with a bit of daydreaming, we can't miss out the traditional joke. So Janne, do you have a joke for us today?
Unfortunately, yeah.
Go for it.
Okay. Why did the bank hire a gardener?
I really hope this has nothing to do with Bitcoin.
No. They need to cut down branches.
Very topical.
Yeah.
Oh my God. Okay, fantastic. Let's get into the headline news that we have all focused on this time from the events in January. Why don't we start with you, Janne? Which one did you pick out as being the most interesting to you?
Yeah. So I picked a company called MobilePay. Have you heard of it?
Something, yes.
They've got something to do with paying
On
your
mobile, maybe.
mobile something.
Pay,
Yeah.
Came out of Denmark, I believe.
Yeah.
Yeah.
But yeah, MobilePay, they have relaunched in Finland. So as we know, they merged with Vipps from Norway a year or two ago, and now they have moved into the same platform by Vipps. In Finland, basically, they relaunched the consumer app, migrated the users to the new one. Nothing dramatic there. I think they have around half of the Finnish population using the app. It's very convenient, pretty much a standard in Finland for like consumer to consumer payments. Mm-hmm. And also on the online side in Finland, they have a pretty nice market share, around 1/3. But now the interesting thing is the retailer thing, the point of sale solution. So they did close that down for a while. Now they have reopened it for the retailers. Big delay, or not delay, but difference now is that the big retailers, Kesko and S Group, are not back in yet. They're doing some other renewals. We read last month about S Group having a big deal with Adyen on their entire payment system. But the question is here that now they are moving to QR codes. So Finland is a place where, at least myself, I've been using the NFC payment contactless cards since, they became a thing like maybe 15 years ago, and I've been using the NFC Google Pay for at least 5 years. That's really like the standard way for me to pay. So in order to make QR codes like a thing in the Finnish stores, that's interesting how they can, change the habits of people. Is that possible? And that being said, we have also now read news about Apple NFC chip possibly opening. So would that be a smarter way to start working on moving MobilePay to the NFC solutions? And of course, we're still not there yet. I think the getting certified with Visa and MasterCard on that side is another big thing. But what do you think? Like, is QR code the thing? Should you go for the NFC because that's the standard? How do you see like the situation of trying to make a breakthrough with kind of a new way of paying?
I have some thoughts, but maybe Ville, you first. I mean, you are head deep in payments, so this is right down your alley, right?
Yeah. So personally, I don't like QR codes. The NFC is just so much more convenient. So I've always been saying that if you're able to use NFC in a good way with a native wallet, there's nothing better.
Yeah.
However, it's not as black and white as that. So if you look at what NFC actually requires today, so you have to manage the payment application with a secure element, you have to have the acquiring infrastructure. It's basically a very complex and expensive still. I mean, it's much more simple than it was like 10, 15 years ago when I started in this space, but still, it's fairly expensive to actually get that infrastructure in place. So if you have it, if you're able to do it, it's the best way to do it. However, it's so expensive and complicated and sometimes even closed, like with Apple ecosystem, that you're just not able to do it in a scalable way. And that's where the QR codes come in. So yes, they are a viable option. They're not as good as NFC if it's done properly. In terms of usability, security, all of these things are worse with QR codes. But they are cheap and they're very scalable. So having QR codes available, as we've seen in places like China, to a certain extent in Africa, they can become popular and they can become very usable. So I think that argument holds water. What's interesting to me now, when you actually put NFC wallets like Apple and Google on the side and then compete directly with between QR codes and NFC, how's that going to play out? I think MobilePay and other QR code based schemes have to put in a lot of loyalty, value-added services, a lot of incentives for people to turn towards that. And we'll see if that actually will happen. One thing that I know that MobilePay actually did in the past already, they had integrated the retail store loyalty cards into the MobilePay, so you were able to do this kind of a single payment without tapping the loyalty card separately. And I heard from a lot of people that that was the reason why they preferred MobilePay at the point of sale. So I think they're going to retain that for their strategy to work with QR codes as well. So I think it is possible that they will reach some scale. That being said, I also read an article from the Finnish newspaper Helsinki Sanomat that the MobilePay is very, very keen on actually tapping into the NFC infrastructure now that Apple is opening it up. So they are not saying that we will be QR code forever. They're saying that QR code is the most convenient thing for us right now, but NFC might be in the future.
Yeah.
I think, from my perspective, there are two different use cases here and two different demographics almost between NFC and QR code. I mean, there's a lot in your story to unpack, so from my perspective, that first. Like you said, NFC is perfect if you've got the infrastructure, if you're a large enough merchant to be able to support that and have that infrastructure. But like, for instance, like I did for January, I go to the gym and I'm still going to the gym, and my gym is open very early to very late, but it's unmanned for most of the time. And what they've got is they've got all their drinks, they've got all their snacks, they've got all their everything else, and then they've got the QR code for MobilePay, which it's nice and easy from that perspective. They don't have the NFC and all that set up. You want to have a bottle of energy drink when you finish with your workout, you take the energy drink and you scan the QR code in MobilePay, boom, you've paid. So I think when it comes to small merchants, when it comes to the lemonade store, all of that sort of stuff, the QR code actually makes a lot of sense. When it comes to if you want to go to the large supermarkets or taxi or something else, NFC makes perfect sense. And I think we're going to see a merger of these going forwards. I don't think it's one or the other. I think it's a merger, and it's partially dependent upon the size of the merchant or the transaction you're making, right? Yeah. But the other one, to MobilePay, the future is digital wallets. I mean, I've said this repeatedly. I actually think that
I thought it was platforms, but okay.
No, but so, and I did the post on LinkedIn, right? Yeah. I believe that in the Nordics, at least, or in mainline Europe, the wallets are going to become the platforms in the banking world. I mean, I've said this multiple times. Airpussy, everything that Airpussy is doing now. I mean, there's not much more required for it to become almost the preferred platform for generic banking capabilities, right? They already do quite a lot of it. You can pay for your gym membership. There's subsidized parts from your work. You can connect your own bank account. You can connect the Finnair loyalty points. You can add more money so you can pay for stuff when you're... What's really missing? A digital wallet that does peer-to-peer payments, right? You can almost imagine an Airpussy in a half a year's time. We go for lunch and we're sitting there having lunch. We all say we're paying with Airpussy and we split the bill, right? So I think the digital wallets is going to be the real disruptor going forwards.
Yeah, I do also want to address the other part of this news, which was the fact that MobilePay did migrate to a new platform.
Yes.
Yeah.
And huge congratulations to the team, by the way. I think all things said and all things considered, it went really smoothly.
Yeah.
They literally just flipped the switch. They updated the apps on people's phones, and everything worked overnight. So there was no major outage. There was no kind of disruptions to the service. So again, congratulations to the MobilePay and Vips teams for making that happen. But few things that actually did come out of that. So after the following weeks, people started to realize that what actually did happen here. So a couple of things on the positive side. So for example, they had this cost sharing application called WeShare. They shut it down a while back, but now it's back and it's integrated or embedded into the MobilePay app. So that was a fantastic news and a bit of a surprise for everybody when it came out. But then they learned some interesting things. So for example, turns out that people have been using MobilePay in a very unseen way. So, for example, a lot of people had unpaid payment requests on the wallet. So they had kind of sent, okay, you owe me 10 euros, you owe me 15 euros. So you put their payment request in, and then the person will pay it when they will pay it, but it might take a very long time for them to actually pay it back. So a lot of people had dozens, even hundreds of payment requests. And once the migration happened, they didn't think that that's a really important use case for whatever reason, and they wiped them all out. So there was that bit of a kind of pushback on the migration. So they did lose some of these things. But again, lessons learned. And the second one, still hitting the news even today on this MobilePay, is trying to navigate through this at the moment, which is the fact that you're able to do reverse number lookup with the MobilePay application. So if you put in a phone number, it will show you the owner of the phone number. So you don't need number services anymore, number directory services anymore, because you can just use MobilePay for that. That's a bit of a fishy area in terms of privacy protection, so I think, but this is an ongoing case, so we'll be following that up later for sure.
And that will bleed over into the implementation of the new instant payment regulations as well, right? Because the capability of doing real-time matching between IBAN numbers and actual receiver is exactly the same thing, right? So if you know someone's IBAN number, you can just push it in to find out who it belongs to, right? So very interesting. But in the interest of time, what was your news article?
So we already talked about Bitcoin, so of course I had to pick the crypto story in the news list or the newsletter. So my news is that the payment service provider January in Denmark, they say that they're called a crypto gateway. So they provide payment accounts for crypto companies. So again, connecting the worlds of fiat and crypto, and they are indeed a licensed payment service provider in Denmark. They are now partnering with Fireblocks to do this kind of institutional custody wallets effectively as part of the January infrastructure. So the headline really was the Fireblocks part, but if you kind of dig into the broader partner landscape of January, it's quite interesting. So just a month ago, they announced their cooperation or partnership with Chainalysis. So they are really taking this security and fraud prevention quite seriously at January for good reasons. Like I said, they are licensed, and their whole value proposition is that they are a licensed provider of payment accounts for properly supervised and managed crypto companies. So they are hitting an interesting stride here. They've been around for a few years now. I think they got like 6 million euros funding a couple of years ago, and ever since they've been building this business from the ground up to be this kind of licensed and trusted gateway of service that has been severely in need for the crypto industry. As we all know, crypto companies are not able to get bank accounts. And if you are any way dealing with crypto, you're always trying to find banking connections. You're always going to be on the lookout. So even if you do have a bank account, like many of the crypto exchanges do, you're constantly being audited and asked questions from the bank, and you're always at the risk of losing your bank connection. January promises to remove that problem from you as a crypto company. So they're taking that headache to a certain extent. They are absorbing some of that risk as well, and they're trying to work with licensed banks in order to provide this account infrastructure in the background. They started with providing basically these payment accounts, a virtual account structure around a physical bank account in the background for these crypto companies. Now they've extended into, they will actually launch, they already launched the proposition, but they're still not in production for business wallets and trading of crypto assets for businesses and institutions. So and that's why they got the Fireblocks part as well. So they want this wallet infrastructure to be provided by Fireblocks. So interesting. So the focus on crypto companies initially, but now it seems like, they have not said this out loud, but to me it seems like that they're now moving into really their direct to enterprise sales. So they're saying that if you are a treasury in a very large company that's doing cross-border trade, you might as well get a wallet with us, and then you will be able to handle cash management using these crypto assets, stable coins, and so forth. So I think it's an interesting proposition. I know that they have a lot of challenges, but they're effectively kind of pushing the boundaries of regulation a little bit here, and I find it very fascinating.
And I think that's, I've always said, when it comes to cryptocurrencies and it comes to Bitcoin, it is not the notion of Bitcoin and cryptocurrency that I've got an issue with. It's the lack of regulation, the lack of governance, the lack of control and consumer protection. So if they are saying, we are really focusing on the compliance, we're really focusing on the regulatory elements, we want to do this in a good way, then great. I have no problems with that. I think it's on the peripheries. We're still talking about crypto. We're still talking about Bitcoin, and at the same time we have in the past seen a number of proposed legitimate organizations saying we want to follow the regulators, we are being open, we are being transparent, and then oops, look, our CEO is in prison, right? So
DX.
so it's to be seen. I am very encouraged by this move, by what they're doing. They're going to have a problem with, are the banks going to want to really sit on the other end of that journey? And, because they still need to get the bank accounts themselves, right? So, but good in the right direction. I'm still going to be dubious about Bitcoin and everything else that goes with that. But Ville, Helsinki Fintech Farm, you guys are...
Janne.
Yeah, Janne. Well,
Janne.
You guys are, deep-rooted with the fintechs and the Bitcoins and the startups and everything else. What's your view on this one?
Yeah, so actually talking about kind of mainstreaming the crypto industry, if we go back before the ETF thing, so the trend about Bitcoins and big money, talking about institutional investors, was that the banks, traditional banks, are still quite cautious about investing, but then there's a lot of capita, like family offices or even like treasuries from corporations and so on, who are interested in investing in cryptos, and that's been clearly like the growing trend when it comes to institutional sales in Bitcoin services or crypto services in general. So I think this case is also like going to that niche, which has clear potential, that, like you said. So it's interesting to see if more things will also merge on that side. We know of course from Finland, for instance, CoinMotion has been focusing also on the kind of institutional side, for instance.
Yeah, I think this is also a clear challenge to the supervisors and the regulators, because down there saying that we have a license, we comply to all of the things that you're saying us to comply to, please supervise us, tell us what we're doing wrong, and we will fix it. So again, it's an interesting play and dance happening here in this space. The risks are still very real, to be clear, but let's see how this January is able to navigate those.
Yep, absolutely. And as we always say, time flies when you're having fun, and I think we're rapidly heading towards the end. So I will be quick on the news article that caught my view, and it caught my view because it seems to be a bit of a trend. I mean, we had, in our last episode, I talked about the partnership between Savings Bank and Tink, right, where they are trying to improve the customer experience, the customer journeys. We had a discussion around PFM and those sort of things. The news that caught my eye was Danske Bank partnering with Backbase, again to modernize their channel strategy, their customer experience, same sort of thing. So I'm starting to see this trend of banks realizing that the demand from the customer, from the consumer, is changing. Being able to deliver on that changed expectation is something they need to deal with. I think that's fantastic. I don't think it's necessarily completely new. We've seen many banks in the past putting digital lipstick onto, the front end, leaving the back end. And that's one thing that concerns me a little bit in this. But, we look at Savings Bank, we look at Danske Bank, we look at these announcements. Yes, Tink has got some great technologies. Backbase, fantastically good technologies in what they're doing. But how far can you push the front end without doing anything with the back end? And back to what we said a little while ago, interest rates are up, they're cash rich, they've got money in the bank. Is maybe now the time to be saying, let's look at our legacy systems, let's look at some of our manual processes, let's reimagine some of those customer experiences, not by putting an additional layer of something in the middle, but to actually look at this holistically. But that aside, I think that Danske Bank is going to be doing some interesting things with Backbase going forwards. Let's see how that turns out. But Ville?
Yeah, I mean, first of all, I think I started my career in fintech 20 years ago, and the company that I worked for, it was a startup back then called Meridia Financial Software, for all of those OJs who might remember. The first customer of Meridia was Sampo Bank, which is now in Finland Danske Bank. And I kid you not, we did a multi-channel front-end orchestration platform for Sampo Bank in Finland. A full J2EE, the usual layered architecture, very fancy 20 years ago. We did that, went into production, and then it got swapped out almost immediately when Danske Bank took all the operations to Denmark. So when I read about this Backbase news story, it's like, oh wow, what the calendar is like 15 years ago, or what happened here? Because ultimately it's still the same proposition, like you said. They're building a digital kind of modern, at least modern-ish, front end to cover the kind of old legacy systems, like you mentioned. And Backbase is as good as any company in this space. I mean, they are a global leader in the banking front ends for sure, and I'm sure that they're able to do great things with Danske Bank. But to your point, is this really modernizing, or is this kind of just putting a nice layer on top of something that you're not able to actually move into a kind of more modern design? I think that's an interesting thing to see. And again, I somehow feel like we're 2024 and we're getting a front end announcement seems a little bit dated.
Yes, potentially. What about you?
Yeah, definitely. Like there's been discussion about modernizing both like the core and the front end for ages. Recently, a lot of discussion about composable banking, and there are better ways to modernize, move from the monolithic systems to something very cool and composable. And I think there's an idea; it's a no-brainer, but the implementation is the thing that I'm still waiting to see. Maybe you will know that there's been quite a many of these, and the end result isn't necessary as predicted, and it's probably not the fault of the fintech provider. I think they have good solutions on the market, but in order to implement the entire thing in a traditional bank is it's not a piece of cake. But I'm looking forward because I'm a Danske Bank business customer, and I've been providing them with this innovation that, hey, what if you would have this solution where I could check my bank account balance with my mobile device. So they've been replying once in a while that it's on their agenda. It will be coming soon, but maybe this news will help it to become reality.
Yeah. Imagine that.
Fantastic. Well, I think we've run out of time. As always, we could continue unpacking all of the news articles from the January newsletter. Yeah. So for all of the listeners, watchers, if you want to check out the full newsletter, then hop on over to Helsinki Fintech Farm. Check the link in the description down below, and obviously subscribe to get the newsletter sent every month, and then we'll continue reviewing what we think is the most interesting news from each month going forwards. Until the next time, Janne, how can people reach you if they want more?
Yeah, helsinkifintech.fi is the place to go. Also remember to you can subscribe to the newsletter there, and also follow us on LinkedIn.
Ville, if people want to chat more with you?
You can find me on X, former Twitter, and of course LinkedIn.
Okay, and me, Krogdahl, I am on LinkedIn. That's my preferred place. Obviously, you can find Ville and myself also on the Fintech Daydreaming website. Unlike you, I do have an X account, but I haven't used it that much since it changed from Twitter to X.
It is weird these days.
It is a weird place to be these days, absolutely. But with that, hope you've enjoyed this episode with us. Please, if you did enjoy what we've talked about, share it with 3 friends. Just help us to grow. It brings warmth to our heart as we see more listeners join us and join in with the discussions. Until next time, this has been Fintech Daydreaming.
This is Fintech Daydreaming.